Hey guys, Grant here with another great Gutter Growth podcast for you. I got a good friend and just all around guy you need to get in the same room with. You might have seen him at the summit. You may have seen him here on the podcast before, and you might even be one of his clients because that list is growing quickly. So thank you, Mr. Plett, for being with us. He's one of the owners of The Flex Keeper. You can find them at theflexkeeper.com. Good afternoon.
Hey, Grant, what's going on, buddy?
Man, just getting the year started, getting rocking and rolling, trying to stay dialed in, and that's why we got to have a conversation with you.
Yeah, for sure. I'm my phone is ringing off the hook at this time, as you can imagine. People looking for tax preparer, tax advice, just general help in finance, and I'm happy to assist with everybody with those questions and that. And happy to be on this podcast with you to maybe talk a little bit about year-end planning and hooking up with me and getting the best tax preparer in Palm Beach County on your side.
Let's go. You're better than Palm Beach County, man. You're taking over the United States with us. Something I think that's funny, and I'll throw you up a question here to get the ball rolling. But I have a new background I was showing you. This is actually my real wall in my office, and it does really weird things depending on where you're standing. But for you listeners and you viewers, like this back here does not have to be the way that your taxes, your books, and your accounting looks like. Jason and his team can absolutely help you make sense of, where you were and where you need to be going and help you get that dialed in. Jason, where should people be here in the coming into the third week of January, dealing with finances from last year?
Yeah. So what we want to see and what I'm hoping everybody has is a working set of books for 2025. If you've been in business for 12 months of the year, we need to really, really see and make sure that you have your numbers squared up, that you have a finance professional on your side that has helped you out with those things. And you are ready to get your tax return done. Now, we do have a 3/15 deadline for those S-Corp returns, which is a month ahead of the personal return of 4/15. So it's very important to keep that deadline in mind because a lot of people actually miss it and think that everything is just due April 15th. That's not the case. All S-Corp returns and 1065 partnership returns are due March 15th. So that should be the date that sticks in your mind. So that leaves, as you can see the timeline there, Grant, that leaves very, very little time to get stuff in order. And if you're thinking, man, I haven't done anything for 2025, like now is the time to jump on it. It's not March 15th or July 15th or when my significant other gets around to doing the bookkeeping. Like, it's important to get your numbers together now. And let me just say why, just beyond knowing where you stand financially, a lot of people think that April 15th is the day that they have to pay taxes, and that's actually not the case. If you owe the IRS money, you only have until April 15th to make that payment. If you make that payment after April 15th, you're exposing yourself to penalties and interest. And as a tax preparer, that's the last thing I want to see my clients paying.
Yeah, for sure. Sometimes we get caught up in like everybody's on this lifelong journey with us and we're speaking only to people we've spoke before. So I just want to back up a little bit. Just give a very quick for the new guy or gal who's like, hold on, you said S-Corp? I have a LLC, I think, or DBA. Just give them what's the DBA, what's the LLC, and what's the S-Corp. And I'm not looking for like benefits and things like that. Just what are they?
Yeah, so the three things that you have hit on there is what I predominantly see most small business in the home service area are running. They're either running something under their own name, which would be considered a sole proprietorship. They may have actually filed for a DBA or a fictitious name, as we know it here in Florida, but they're still running it under their personal name or their personal Social Security. And that's fine. Again, generally not the taxation that I like, but that's what they're running. The most common thing I see, though, is LLCs, guys that set up LLCs, and they're the 100% owner of the LLC, and they are running it because somebody said, well, at very minimum, you need to set up an LLC because it's going to give you some measure of liability protection. And the third thing that I see, not infrequently, but is actually my preferred tax entity structure, is an S-Corp. And that requires you to file a second tax return plus your individual return. So if you don't know what you're running and you're like, well, I only filed one tax return last year, chances are you're running an LLC or a sole proprietorship. And you may want to then discuss with me what the taxation, the pros and cons of running one versus the other. And I'll be happy to kind of give you the horse and pony show on what's, the benefits of one versus the other.
Yeah, they definitely have different, benefits and pitfalls and all that type of stuff. So yeah, definitely get with Jason if you're like curious what you did or why you did it. Sometimes, people are starting businesses and they just get advice from their neighbor or their grandma, and they just tell you what they know best. So get up to date on the best way to, help yourself. Okay, so we talked a little bit about, these deadlines that are coming up. Let's talk about this year. Where are we at in January when you're talking about with your bookkeeper, your CPA, your accountant, whatever that is, or if that person is all rolled up into one? You guys offer some of those services, correct?
Yeah, we're actually a full service financial entity, or we're a full service financial firm. So we have everything from basic bookkeeping, and we actually don't call it bookkeeping. We're like bougie and we like to call ourselves accountants, right?
Yeah.
So we offer your basic accounting service, which is, debits and credits, putting stuff in the right buckets, reconciling your bank account, very, very straightforward and not complex work. And then we take our services right up to, strategy for your business, budgeting, cash flow forecasting. So we can basically handle your business from virtually infancy to when you're ready to retire or sell or anything like that. And of course, as part of that suite of services, I'm a CPA here in Florida, and so we offer tax preparation and tax planning. Which actually, Grant, thanks to our partnership with you, we've actually developed a very nice package for our gutter clients. And this package is basically tax return prep, tax planning, and a review of your existing financials. So I even talked to a potential client yesterday that already signed on with me, and they said, their thing was, we love our accountant. She does a great job. She makes sure our books are clean. Everything is in the right bucket. But she doesn't do tax, and we need some tax and strategy. And we just like for you or your team to just do a little review of what she's doing. Make sure she's getting everything. Make sure we've got all the deductions we can take. If there's write-offs that you see there that are missing, give us those. And so, we have put together a very nice package for that. And I'll love providing that all day long to everybody. You don't have to break up with your accountant. If they might be it may be your significant other, you don't have to break up with them. They can continue to do the books,
right?
But you can get a professional oversight for not a lot more money, and you'll know that they're doing the right thing for your finances. And then we're going to come along and make sure that we strategize around what your tax liability may be for the year.
Yeah, how great would it be, like you said, in some of those more rare instances, because there's a lot of people that have significant others, brothers, aunts, and that's not the right person. Not because it's family, but they're just trying their best, and maybe they're not, full scale, or they did it for a little bit at another company. So two things here. One is, that's fabulous that you guys offer that to come in, and how great would it, if your wife, let's just use that as an example, is doing the tax, the accounting, and you get some oversight, and Jason's team was like, actually, you're doing a pretty good job. Here's one or two little, tips that we would do if you were to move forward and hired us. But if not, here's some advice. Thank you. Keep up the good work, and let's align this for tax purposes as well, right? So strategizing for those, and that's kind of where I want to move to next. So like, you work for this one gutter company called Mother's Gutters, and I think that's the only experience you have with doing gutters, or you guys are actually now have an in-house department, right, to specialize in these, home service, but specifically the gutter industry. Tell us a little bit about that and what the benefits are of using you guys to help strategize because of your experience in the industry.
Yeah, absolutely, Grant. Yeah, we love doing work for Mother's Gutters. Obviously, we've come alongside you guys and are excited for our partnership, and also putting the things that we think are the right strategy to grow your business, and then also make smart choices with regards to taxation. Right. And just marrying those two, it's going to be, I'm very excited for the future. But we also knew as a company that we really needed a leader. Not that I'm going anywhere. Right. I'm obviously, still sitting in the seat, but we really needed a leader in our company that was going to focus on our home service. And we actually started what we called a home service division with a specialty in the gutter industry. And we actually went out and hired a high-level accountant that is basically handling all our clients. So not only do you get my expertise, which, as you can imagine during tax season can be a little bit fractured, you also get a high-level accountant that we have vetted, that we have trained, that we have put in charge of our home service division. And this gentleman is amazing. He knows a lot of stuff about accounting. He's not a tax guy. I'm still the tax guy,
right?
But he's the guy that's going to make sure everything's organized in the right places. We actually did one other thing, Grant, that we have provided to the gutter industry and your clients, and specifically, and that is that for a small fee, we've actually adjusted all of our clients' chart of accounts. So that's a standard chart of accounts. And we've done this with the express desire that we want your clients to be able to talk apples to apples among their peers. Yes. So when they're talking about their top line revenue, those buckets are all the same across our our portfolio of clients that we're working that have come through gutter growth or through referrals from you. These guys are all getting the same chart of accounts, so they know they can talk with us, with amongst themselves, our clients, and be really talking the same language. Because there's not weird stuff going on someplace in their financials. It's all standardized. And better than I how much more productive you can be as a company when you have processes that are standardized and that are similar across the industry.
Yeah, that's what's so important about we talk a lot about the movement in the industry. It's a small niche industry. We're not as big as roofing or air conditioning, but to me and to a lot of hardworking folks around the country, how big or how small we are doesn't matter, because we're in our own world. We have our own bills and our own families and our own communities, and we're out here just grinding, right? And so to have some type of protection behind us, and that's exactly why we use you for a plethora of businesses. All the businesses that I own, you've put together my strategy, not even only on my tax side, just as way that I'm forming these entities. And it's so nice to be able to deal directly with you. And our relationship started just through this podcast and has transpired into so much more in just a couple of years. And so it's really nice to have the Flex Keeper alongside of us, specifically outside of our friendship, because of the movement you're helping create in the knowledge, the education, which is changing the atmosphere of the conversations for your typical gutter guy. He's able,
absolutely.
Our clients, specifically where I'm hearing, because on the Facebook chats, people aren't necessarily talking finances, but for I think 93 people inside of our collective, we're talking finances, and you guys have a lot of those people speaking the same language, and mind you, the language that other people are speaking, that either you haven't had access to yet or haven't had access to you, are also using very high level accountants and tax preparers, and you guys all speak the same stuff, which is great stuff that gets us projected. What is give us some goods today. Give us something, some strategy, maybe something new that you're recommending, or just a small little, just something that guys can implement this year, and they'll say, oh yeah, well, I heard that from Jason Platt.
Well, that's a very, very difficult question for me, Grant, because because I'm not your TikTok guy that's giving 20-second tax loophole advice.
Go buy the big vehicle immediately, right?
Go buy the 16,000-pound vehicle that gives you a huge deduction.
It's actually a great question for you, because although you might not take 20 seconds, take 2 minutes and give us some juice. I know you're the real deal, but just let's change somebody's thought process right here about the right way of doing things.
Yeah. So, Grant, I think the biggest, one of the biggest things that a lot of people are ignorant to, and I even, touched on it a bit during my talk at the summit.
Yes.
And that is what we have in the gutter industry is what's called a QBI deduction. Okay. So what this QBI deduction is it's a 20% cut of the profit of your business. So if you're making $100,000 of net profit, now we're talking net, I'm not talking about, you sold 100,000 of jobs. I'm actually talking about your net profit after all your expenses. You're only going to pay tax on $80,000 of that 100,000. Okay. So it's very important when you start talking about things that you want to deduct, you want to be very careful about the things that you're deducting, because basically every dollar that you're deducting, you're losing a 20% tax cut. Now, I'm not suggesting that you don't deduct things. I obviously want to deduct as many reasonable business expenses as I can, but I also want to be careful about deducting so much stuff that I crush this QBI deduction.
Okay.
And one of the things that I still get asked even to this day is like, yeah, I have Timmy here, my son Timmy. He's 14. He's helping me on jobs occasionally. He's maybe doing some light stuff. Should I put him on payroll? Okay. Again, I'm not saying that you shouldn't pay Timmy a little bit of money for his help around there. I'm just saying that putting your kids on payroll is not a viable tax strategy anymore, thanks to this QBI deduction.
Okay.
So there's always changing things, and there's always advice that, again, people are getting tax advice from TikTok. And I had a client ask me this morning, hey, should I put my kids on payroll? And I said, no, that is not a viable tax strategy. The other thing, Grant, that I did mention during the summit, and I do want to emphasize again on the podcast here, and that is that we joked about going to buy a 6,000 pound vehicle, right?
Yeah.
I'm not that CPA. So if you want a CPA to tell you to go buy a 6,000 pound vehicle so that you can get a tax deduction, you're probably not the right fit for me, because I'm never going to tell you to go spend money. Again, I don't want you to get the wrong impression and say, oh, Jason told me not to get a new truck. If your truck's falling apart, go get a new truck. Like, that's a business decision. And that's a write-off.
Let's be clear too, in the industry, because a lot of people are listening are going to have their kids. Like, even we want to get Luke, right? He's not saying it, don't put your kids on payroll. He's saying don't use that as a tax strategy. Like, if you just want your kid to earn some money and they want to be on payroll, that you're not talking about that. You're talking about getting credits.
Right? Yes, absolutely. And then back to the truck thing. Again, I'm not saying don't go buy a new truck. If you need a truck, go buy a truck. What I want to educate my clients to do, and that is to maximize your earning potential during these years when you're healthy, you're building a good business, you're out there, crushing it.
Yeah.
Let's use this time to put yourself on payroll, because there's so many owners that I talk to that say, I don't take a dime of payroll. Okay. You need that needs to be the first step. The first strategy is make wise financial decisions to pay yourself at least a little bit. Right. And it may not be, I start my new business owners at about $20,000 a year. And, me, Grant, you know that you and I probably wouldn't even get out of bed for $20,000 a year. But listen, that's not the point. What I'm trying to say is take baby steps to start paying yourself a payroll. You're doing yourself a disservice if you're just doing all this work and you're not getting paid for it.
Right. Because explain to them about the taxation of that.
Well, it's not really so much the taxation. It's really just disciplining yourself to get that payroll going for yourself. And then where that becomes a tax strategy is at the end of the year. Instead of me telling you, hey, go buy this big $6,000 truck. Right. Now I'm going to say, Grant, we're going to start small, but now we're going to invest in a traditional IRA. And we're going to get, if we max out our traditional IRAs, which I think this year is $7,500 you can contribute, you're looking at probably a $2,500 to $3,000 tax savings on that contribution. Okay. So essentially, you've taken that $7,500, and even though that seems like a lot of money to go put into your retirement, in essence, if you do the math, Uncle Sam is actually contributing like $2,500 to $3,000 of that $7,500 that you're contributing. Okay. So now what we're going to do is, as you grow as a business, we're going to increase your salary, and then we're going to try and push as much money into your retirement as possible. So instead of buying the big Hummer that you drive around in, you're going to have this really, really nice nest egg for when you turn 60, 65 and you retire. Hopefully, when you're sitting on a beach someplace, you'll send your great accountant a nice postcard and say, thank you for making me save. I'm enjoying a daiquiri because of your strategy for me.
You can have a picture of 2 Hummers in the parking lot.
That's right. That's right.
Yeah. No, that was great, Jason. Yeah, we got to see you at the summit. I'm assuming we'll see you again this year at the summit. We might even get to see you at some of at least one of the lives. I think we're talking about trying to get you out to check us out. Where are you thinking? Somewhere in the South, right? You're not going to Denver next month in the middle of tax season.
Well, it's going to have to be after tax season, but I did look at the list and there's several places that look very, very tempting. So, it's, as I told you, TBD.
Yeah.
But we'll certainly try and make an appearance. I especially like the Gutter Growth tour shirts.
Yes.
That's going to be a collector right there. That's so I at least have to get in to get one of those.
Yeah, for sure. And anybody that's looking to get Gutter Growth tour shirts, Gutter Growth swag, even Mother's Gutter swag in general, you can check it out at that guttergrowth.com. I think it's guttergrowthshop.com or something. It's all over online. I don't know. I have so much of that swag everywhere. It's fun. It's a good thing to have.
Well, you and I are kind of cut from the same cloth, because when I actually started with FlexKeeper 2 years ago, Jody, who owns the business and is my business partner, she has this great logo, which you see here, the octopus.
Yeah.
And she wasn't really doing anything with it, not because she didn't want to, but just, because she's extremely busy. So I came in and I took the octopus, I put it everywhere.
Right.
And during my first year, even though I'm the de facto CFO of the company, my CEO told me that I had to, that I had overspent my marketing budget. So, I had to stop printing the octopus T-shirts. So anyways, I always laugh when you talk about all the swag that you're rolling out, because you and I, we're kindred spirits and needing the good looking swag.
Absolutely.
Yeah, for sure.
Okay, Jason.
And by the way, you get a tax deduction for that.
I was just going to say, give us one last thing. All right. So tax season, freshen us up. We're going to hop off. We don't want to, not that accounting and taxes are boring, but we know that the community likes it in small doses. So it's January 16th. Give us a couple of quick deadlines to wrap it up, just as a refresher. Hey guys, you should do this by this. You've got a couple things. Do your CPA a favor and make sure you've got this ready.
Yeah, I'll talk through all of that, Grant. The first date that everybody needs to be aware of is January 27th, and that is the first date that the IRS opens e-filing. So you can't even get your taxes filed until January 27th. So if you're the type of guy that's like, oh, early bird gets the worm, that's the soonest that you can file a tax return. The next major deadline to think about is January 31st. So that's the deadline for you as a business owner to submit 1099s to your contractors. So I know that a lot of gutter industries use individual guys that they're contracting to do jobs, or they're using other gutter companies. Yep. And if those gutter companies are an LLC, you are obligated to 1099 them. So the deadline for getting that 1099 out is January 31st. And then the next major deadline is March 15th. And as I mentioned at the top of our podcast here, that is S-Corp and partnership filing deadline. If you are if you are a true LLC, and when I say true LLC, that means you don't 100% own the LLC. You're a partner with somebody, and you're filing a 1065 return. The deadline is March 15th. If you're filing an 1120S return, that is an S-Corp return, the deadline is March 15th. Okay. So it's very important to keep that date in mind. And then obviously the deadline that everybody in America knows or should know, and that is that April 15th is the deadline to file your personal tax return. If you're an LLC that you own 100%, that goes on your Schedule C on your 1040, which is, again, an April 15th deadline. And in the odd case that you're a C-Corp, which is an 1120 return, that deadline is also 4/15. I don't see a lot of C-Corps hanging around. The taxation is terrible, and most people know they shouldn't be running a C-Corp. But I do want to mention that if you are running a C-Corp, that deadline is 4/15. Now, caveat to all of these deadlines, for those clients or people that are listening that are my clients, we may not get around to your tax return on March 15th. But if you are hooked up with us, we're going to automatically file an extension for you, and that's a 6-month extension till September 15th. Again, that gives us 6 additional months to do your return, but we have to file the extension. Same with the personal return. If you're our client already on April 15th, if you haven't gotten your stuff to us, or maybe we're very, very busy and we haven't got around to your stuff, we're going to file a extension for you to October 15th, which gives you an extra 6 months to do the return. Now, be very nice to your accountant and try and get them your stuff before the deadline. Okay, that doesn't mean they're going to do your stuff before the deadline, but it's always nice to have all the information that I need to do your stuff, because this is what inevitably happens, Grant, and it drives me crazy every year. And we file an extension for our clients, and then we don't hear from them for a few months. And then right around August 1st, we start asking for their stuff because we know there's a final deadline on September 15th and October 15th. And then inevitably they get their stuff to us September 1st. And that's not a fun thing. No. You are really messing with your accountant when you do that, and you will not be their favorite person, and you will not get invited to Christmas or Thanksgiving dinner if that's the case.
Well, geez, I mean, you have to be in the country. You have to at least be in the country to spend time with. You can't spend time with the plebs at Thanksgiving or Christmas because they're going to be traveling somewhere.
Well, that's because we try and take that month off and wind from all the stress that our clients give us.
Jason, fabulous to have you on. I appreciate you. One of these times we'll make the wonderful Jody hop on either with or I won't softball her up questions. We'll make
Hope you she's painfully shy, Grant, as you know.
I'll have to do a secret recording one time. Jason, thank you so much for all you do for our businesses and what you're doing for the industry, as well as our shared clients alike. Hope you have a fabulous rest of your day.
Thank you, Grant. I appreciate the time today.
Absolutely. We'll talk soon. You guys look for Jason at the Gutter Summit and check them out over at theflexkeeper.com. If you're in gutter growth, make sure you're reaching out to Jason immediately to try to figure out, how he can support you, if at all, any in your last year. If you're not, theflexkeeper.com, gutter growth. You guys have a great day.
Thank you.